Hey everyone, the top question I'm hearing from investors these days relate to President Biden's American Families Plan and the associated changes to the 1031 exchange and capital gains taxes. Now, I won't try to tackle that topic in this 5-minute video, but Marcus & Millichap CEO Hessam Naji will host a special live webcast on May 18th to share insights on this topic. He'll be joined by the Real Estate Roundtable CEO Jeff DeBoer and Lisa Nee, the co-leader of Eisner Amper's accounting firm's National Real Estate Services Group. As with all our webcasts, you can visit marcusmillichap.com to register for this event. So instead of talking about taxes, I'll focus on another hot topic, inflation. Now, basically, inflation is a decline in purchasing power most often experienced through rising prices, and it's been pretty tame for about 25 years. The last notable spike was in 1991 when inflation went to the 6% range. Core inflation, which omits the more volatile food and energy sectors, has been under 3% since 1995. The reason inflation is showing up in the media right now is because some measurements of inflation have started to climb. The Federal Reserve did comment on this, saying that it's likely a temporary surge reflecting the reopening of the economy. And that may be accurate, but there are a few things we should consider. First, the money supply is at an all-time record high, up about 26% from last year in February. To combat the pandemic recession, the Fed basically flooded the market with cash. In addition, Congress put $5.7 trillion of stimulus into the US economy in the span of a year. Together, the Fed and Congress basically hit the economy with a lot of adrenaline. That helped keep the economy going through some really tough times. But too much spending can cause price increases. Part of the problem is that as the global economy battled the pandemic, a lot of production slowed. The pipeline of raw materials was thinned out, and many manufacturing components like semiconductors couldn't keep production at normal levels. As we came out of the recession, a lot of needed materials are in short supply. If you compare industrial production growth to core retail sales growth, you'll note that historically the two have been in alignment. As we went into the pandemic, both dropped. But retail sales recovered a lot faster than production, and now in 2021, retail sales have surged. They're up more than 14% from the previous peak set in February last year. Meanwhile, production has recovered, but it's just now getting back to where it started last year. So right now, there is a lot of money being spent while many products are in short supply, and that pushes prices up. But is that a problem? More importantly to the viewers of this video, is that a problem for real estate? People generally don't like rapid price increases. No one likes seeing the price of gas go up 52% in a year, or the cost of lumber going up by 65% like it has in the last 12 months. These kinds of movements raise the cost of trucking goods around the country and constructing buildings, and that basically causes other prices to rise too. And this brings me back to real estate. Generally considered to be one of the best investments to hedge against inflation. Real estate hedges inflation in two ways. First, rents typically rise with inflation. Long-term leases typically have inflation escalation clauses that automatically lift rents based on some inflation measure like CPI. Apartment rents, which typically are realigned upon annual lease renewals, also mark to market. In fact, if you look at the index of multifamily rents versus inflation, you'll note that over the last 10 years, rent growth has outpaced inflation. Second, because real estate investors usually use leverage, inflation-incited appreciation is amplified. Basically, inflation drives up rents, which in turn increases property values. Because investors use leverage, their return on the capital they put up to buy the real estate is amplified by the value increase. So, yes, it looks like inflation is rising fast. It might be transitory, as the Fed suggests, or it might become a more extended problem that forces the Fed to raise interest rates to slow it down. But regardless of whether the current bout of inflation is short or long-term, real estate is one of the better places to be invested. In fact, now may be a very good time to recalibrate portfolios with more inflation resistant investments. There are a lot of variables in play right now, and that can be an opportunity for investors that keep their eyes on the horizon.